Hello and welcome to tradingfloor.com's macro update. With the start of the month this week, we've seen plenty of new data to interest investors. With us today we have Mads Kofoed, macro strategist, Saxo Bank. Mads, welcome.
Thank you.
Today we saw some Eurozone producer prices for January, and both the month figures and the year figures were higher than expected. So what can we say about inflationary pressures? Are things looking like there's more pressure now than what we've otherwise expected?
Well, like you say, producer prices are quite high now. Actually, it's the highest level in 2 years now. And it really is just a confirmation of what we've seen in the other reports. We saw yesterday the flash estimate for February consumer prices, also at the highest point in many, many months, out at 2.4%. So in general, the price level in the Eurozone is rising. However, if we disregard the more volatile components and look at what the central banks are also looking at, then the core CPI and the core PPI are still quite low. So even though the market is already pricing in roughly 1% in hikes from the ECB this coming 12 months, then I still think we should caution ourselves, and I don't think that we'll see a 1% hike this year. The core inflation rate is still too low for that.
Meanwhile, we're seeing in the US the inflation rate is at an all-time low. So what's the numbers telling us now? What's the outlook for the US?
Well, the interesting thing is that right now Federal Reserve Chairman Ben Bernanke is doing his semi-annual testimony for the House and the Senate in the US, and everybody expected them to really start to question him on the rising inflation, which we are also seeing in the US. But like in the Eurozone, the rise that we are seeing in prices is mostly related to the volatile components, especially energy prices, of course, oil prices, which has risen dramatically in the last couple of months. And again, if you look at the core prices, and that is exactly what Ben Bernanke is doing, then they are at, as you say, a record low of 0.8% year on year. So very, very low inflation rates when you look at the series that the Federal Reserve are looking at. So we're still far away from a rate hike in the US, and that's also why Ben Bernanke is saying that is still one of the main problems that they have in the US. So he's saying exactly what they didn't expect, namely that inflation is not a problem. So that's why basically he said nothing that excited the markets yesterday or today.
Okay, so not much news from Bernanke. But meanwhile, we've got strong manufacturing data, and that's like two conflicting sides of the story. Can you elaborate on this?
Yes, yesterday we had the ISM manufacturing report, and that was truly a good report. Yes, there is some margin pressure that is showing in the report and has been showing up there for the last couple of months, but overall it was a very solid report. Production was up, new orders are high, and at the same time the inventory index is very low. And usually when you have this differential between high new orders and low inventories, it suggests that inventories will continue to contribute positively to the economy in the coming quarters. So overall, a very solid report that shows that the manufacturing sector in the US is definitely not slowing down.
Mm-hmm. And of course, later in the week, already tomorrow, we've got initial jobless claims, big numbers, and then on Friday, the non-farm payrolls. So what's the outlook?
Well, of course, non-farm payrolls on Friday is the biggie, and today we had the ADP employment change, which is usually a fairly good indicator of the number out on Friday, and that showed a good increase in payrolls of 217,000 jobs in February. And the most interesting thing is that we saw a very poor reading in the last non-farm payrolls report due to the weather. And the weather effect is not as strong in the ADP report. So that actually means that we could see a surprise to the upside on Friday, which of course would be warm received by the markets. So I think we should start to look up for perhaps a positive surprise to non-farm payrolls on Friday.
Okay, sounds good. Well, thanks very much for that, Mads.
Pleasure.
Don't forget, you can follow more of his commentary on tradingfloor.com. You can also follow him on twitter.com/Mads Kofoed.